Qatar has agreed to buy up to 210 aircraft from Boeing in what Trump has hailed as the largest order of jets in the history of the American aerospace company as he visited the Gulf state. The White House announced economic deals worth more than $243 billion as Qatar became the latest oil-rich country to announce investments as the president toured the Gulf. Hello and welcome to Global Business Insights, where we look closer at headlines moving markets to equip viewers with perspectives on the peculiar business environment. And on Wall Street, the Nasdaq Composite rose for a sixth day in a row yesterday as bets on artificial intelligence stocks boosted the tech-heavy index. The fact that the S&P 500 is also back above the 200-day moving average is a good omen for the broader market, also showing that stocks have positive momentum on their side. American worldwide technology leader Cisco reported earnings and revenue that topped analysts' estimates and issued guidance that also exceeded Wall Street's predictions. Earnings per share at 96 cents beat 92 cents expected, with revenue increasing 11% during the quarter at $14.15 billion, also beating $14.08 billion expected. CEO Chuck Robbins said the macroeconomic environment remains uncertain. Saudi Aramco has unveiled 34 preliminary deals with major U.S. companies potentially worth up to $90 billion in one of its broadest pushes to deepen commercial ties with the United States. The agreement also reflects the scale of the kingdom's push to deepen strategic economic ties with Washington across energy, technology, and finance sectors. European Union antitrust regulators are set to accept Microsoft's offer to widen the price differential between the Office product sold with its chat and video app Teams and its software sold without the app. This could bring an end to a long-running case triggered by a 2020 complaint by Salesforce-owned Slack, which could have resulted in a hefty antitrust fine for the US tech giant. Kraft Heinz, that's makers of the popular ketchup brand, is spending $3 billion to upgrade its US factories, also its largest investment in its plants in a decade, also as it cuts sales and profit forecasts. The factory upgrades will help lower costs by making the plants more efficient, which in turn helps offset President Trump's tariffs, which were also considered in arriving at the company's decision to make the investment. HSBC will cut 348 jobs in France through a voluntary redundancy scheme amounting to about 10% of its workforce in the country. The job losses are part of a cost-cutting drive led by CEO George Elhedery to reduce expenses by $1.8 billion by the end of 2026. AMD yesterday said its board of directors approved $6 billion in share buybacks. This week, AMD also announced a deal potentially worth $10 billion in investment to support an AI company called Humane in Saudi Arabia with chips. Ethiopia has signed investment deals for its minerals and energy sectors worth more than $1.7 billion, mostly with Chinese firms. It also struck a 4-year, $3.4 billion program deal with the International Monetary Fund. That was last July, and is in the midst of a far-reaching reform drive, including the flotation of its birr currency and a push to complete an $8.4 billion debt restructuring with its official creditors. And in Nigeria, the House of Representatives Committee on National Planning and Economic Development warned the Central Bank of Nigeria against the unintended consequences of sustaining higher interest rates in its fight against inflation. Chairman of the committee, Rep. Boeing Nasiru, issued the warning on Monday in Abuja during an interactive session with the Statistician General of the Federation and Chief Executive Officer of the National Bureau of Statistics, Mr. Adeyemi Adeniro. Nasiru said the warning became necessary as the Apex Bank prepares to hold its 300th Monetary Policy Committee meeting. We expect inflation data to come out this week, just before the meeting starts. In the UK, foreign state investors will be allowed to take a stake of up to 15% in British newspapers under government plans to allow media groups to tap into sovereign wealth to fund future deals. A new statutory instrument is soon set to be put before Parliament. The decision comes after a deal by Abu Dhabi-backed Redbird IMI to acquire the Telegraph newspaper was blocked last year over fears of overseas state influence over a British national newspaper. Also in the Middle East, we see the magnificent 7 tech leaders being introduced to the Saudi Arabia Crown Prince, a prelude to an unfolding economic marriage. But what are the issues here? Our deep dive examines this fresh quest for investors wooing particularly emerging markets, especially the Middle East. Like someone said early in the week at the Riyadh US-Saudi Investor Forum, there is so much money, and that explains the rationale for this pilgrimage with Trump. UK is not the first of countries looking for easier ways to bring in new money to expand the economic pie, as domestic stagflation weighs on economies now faced with voters expressing acute dissatisfaction with leaders forced to raise taxes to fund the increased demand on government since the COVID pandemic. The US wants to break a rising BRICS hegemony. China is already complaining that the recent US-UK deal is squeezing its share out of the value chain. We will get a similar reaction after Trump's bromance with Gulf states' leaders. Why is Trump so openly disdainful of the European Union, which he has often described as a parasite that has not bothered to build its own competitive edge, preferring overregulated regimens, high taxes, and difficult carbon emission rules, all resulting in a creeping deindustrialization that will be difficult to reverse? For Germany, 6 years of stagnation with the real GDP plateaued and almost 10% below where it should be according to pre-pandemic trends, it is no surprise the right are gaining political ground. The defense sector is already operating near capacity, and in the short run, increasing government spending on weapons and tanks will have only a limited effect on production. Germany needs a policy approach that renews the economic model and generates significantly more broadly shared economic gains. Key industries such as the automotive sector must quickly be helped to regain competitiveness. But where can that help come from? Trump's visit to the Middle East is another chapter in an alternative playbook for economic policy that really addresses a real crisis that Democrats did not want to see. Indeed, as analysts are now concluding, if UK and European mainstream parties can't come up with new economic recipes, they risk ceding even more ground to the right, with major consequences for the political landscape. With China and Russia becoming somewhat hot and geopolitically complex to handle, the oil-rich Gulf emerging economies are standing out in terms of new investment win-win deals. But the geopolitical issues in the region still pose unique risks. Watching this week's business and economic trade fair playing out in the Gulf states, we also see a different technopolarity with a new breed of technology leaders not only driving stock market returns, but also controlling aspects of civil society politics and international affairs that have been traditionally the exclusive preserve of nation states. We always knew that nations who lead in the technology war will eventually rule others, but we never anticipated heads of technology acting more like political ambassadors, strongly aligned as levers for geopolitical interests. Indeed, these are different times. Finally, what of Africa? Africa has been talking of emerging as a stronger economic bloc for a while, but the removal of barriers to accelerate unification requires a political leadership that still seems apparently to be lacking. The continent has been spoilt with aid and concessionary loans, which only fueled inefficient governance. And there is a new interest, I would admit, in the continent, but leaders must also de-risk the environment significantly and incubate domestic continental players, taking bigger and better investment and global partnerships to attract major ventures being executed within the continent. It's still too early to applaud the success of the business forum playing out in the Gulf led by Donald Trump, but with huge new defense contracts, Boeing smiling again, AMD and Nvidia giddy with the spike in new AI chip orders, analysts are paying attention to what could lead to a global acceleration in the AI new technology-driven industrialization and a reset in the influence map and economic partnerships. We have not seen anything so geo-economically aggressive since perhaps China's Belt and Road Initiative. Still on the Middle East, Qatar's Prime Minister Jassim Al-Thani defended this aircraft gift to the US as critics say this is trying to buy influence. The Prime Minister said yesterday that the criticism was unfair and that the friendship with the US has been there for over 25 years and the gift of a US-built Boeing plane should not raise eyebrows. EVI commented in an earlier post that this is as much about perception as it is about reality, and it could raise conflict of interest issues, if not now, sometime in the future. The UK economy grew 0.7% quarter on quarter in Q1 2025, following a 0.1% increase in the final quarter of 2024. The data beat an estimated 0.6% rise. GDP also was up 1.3% year-on-year in Q1, slightly higher than 1.2% expected, and a 1.5% year-on-year growth in Q4 2024. On a monthly basis, GDP came in at 0.2% in March, better than the expected 0% reading. On data, both the US Producer Price Index and retail sales data out today gives another look at how tariff policy impacted the economy in April. We could also get Nigeria CPI April inflation data. German engineering giant Siemens said its Q1 industrial profit rose 29% to 3.24 billion euros. That's $3.63 billion. Siemens also said that it still expects to increase full-year sales by between 3 and 7% despite uncertainty. And yesterday, U.S. Federal Reserve Vice Chair Philip Jefferson said recent inflation numbers suggest the Fed is still making headway towards its 2% target, warning also of the uncertain outlook. He added that current moderately restrictive policy is in a good place to respond to economic developments. He also added that they still saw tepid economic expansion in the US, with Q1 GDP data overstating a deceleration in activity and labor markets remaining solid. And still in the US, the authorities are soon to announce cuts in banks' capital requirements. Regulators could reduce the amount of high-quality capital against their total leverage, which includes assets such as loans and off-balance sheet exposures, such as derivatives. Lobbyists have been campaigning to see these cuts for years. Asia-Pacific markets mostly down, diverging from Wall Street as investors continue to monitor US-China trade developments. US futures also slipped in overnight trading. Well, that's it on this edition of Global Business Insights. Thanks for watching. This is Bode Oshosami.